Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, and Dennis Dick. We have ourselves a retail earnings bonanza this morning. Target, Lowe's, Children's Place, Urban Outfitters, Nordstrom, and L brands are after the close, so we'll talk about those as well. We have Walmart suing Tesla. That's a fun headline to talk about. We're going to talk about just the back and forth nature of this market. Cardinal Health warned yesterday about the impact of opioid lawsuits on their business. We have a couple non-retail earnings on our radar as well. And we'll just talk about the weird nature of this market, including with our guest, Ivan Feinseth, the partner and CIO at Tigress Financial Partners. He would join us at 8:35. In the meantime, Joel, break this down for us. What's been happening here overnight?
Complete reversal in the S&P 500 futures. Weak close. Look like we're going into the abyss, and boom, your opening tick 93 and a quarter. Your low print 93 even. It's been a steady climb all day and all night and all day. Pre-market high stands at 20.75. We're about 3 points away from that. First target on the upside is the intraday high from yesterday at 29.2450, and still that 29.40 level looming up above. We have crude in the green by 77 cents at 56.90, catching a bid. Gold down 6.40 at 15.0920. Silver in the red as well by 12.3 cents at 17.02.5, and Bitcoin, let's see how Bitcoin is doing here. Bitcoin probably is just hanging out around 10,000 exactly, down $630 at 10,145. That is always the futures quote that I'm giving. Triple D, you have been doing a lot. Do you have Lowe's and Target in Canada? Do you just spend all your money there?
I do have Lowe's. We had Target.
Oh, yeah, that was a big debacle.
A year. And then they bought the old Zellers, which was a retail firm just to Canada. They bought that, and they came in, and a year later they pulled out. And so I guess they decided that Canada wasn't any good for Target. But for Lowe's, I shop at Lowe's lots of times. Lowe's and Home Depots are all over the place.
All right, let's go right into these earnings reports. 1.838 million shares have traded of Target. Spencer, give us that fantastic report.
Q2 adjusted EPS for Target, $1.82 versus $1.62. Sales of $18.42 versus $18.34 billion. So beat and a beat on the Q2 numbers. They also raised their full year EPS guidance by 15 cents from $5.75 on the low end to $5.90 on the low end. The Q3 EPS guidance was in line. And what else did I see? E-commerce sales were strong.
This is blowing away the expected move. The expected move was, I believe, looking at the closing prices, it was rounded to $6. Looks like $5.85. $13.11. So straddle buyers, we've been talking about this. Usually straddle buyers lose. But this quarter, they have been winning in a lot of trades, and they are winning in Target today, and they are winning in Lowe's today. This is an incredible move. I've never seen Target move this much. No, when's the last time it moved $12 on $13 on the report?
Never.
I don't know if it ever has.
I don't think it's ever moved $12 up.
That's an incredible report. If I was long this thing, I would be ringing the register all day. Let's see what it does at 100. It was a good report. Absolutely reporting on the right morning too, because we're up, so that helps, and it's all about sentiment to a certain extent. But Walmart had a good report, Target had a good report. The big box, we've been talking about it. Big box like Home Depot, Walmart, Target doing well. Mall-based retailers doing horribly. Wow, that's just a big move, though. I cannot believe that move today. They are just punishing anybody who was writing options against this.
So why, if you owned it long, I mean, it's breaking out the new all-time highs, why?
Maybe you just raise your stop.
Yeah, there you go.
Go with it. But it's such a ridiculous move. that it's like hard not to ring the register when it's up 15% coming against 100. It's come this far. It's got to try. Has it been through 100? You think it's come this far? It's probably going through 100.
It's right here, man. You're talking. You just busted it through 99. Just busted through 99.
Why not? You've come up $14. Why are you not going to go hit the stops at 100? So I would imagine it's going to 100. What it does there, if it comes back down through there, it'll be interesting. But I have no idea how to trade this thing today. I will probably not be trading Target. And I just want to make a point, because people will say, oh, well, you could have hedged it with Walmart. They were saying, and I talk about this. The main thing, though, you've got to consider is if the company that you are hedging with has already reported, it's not going to have a big sympathy move. We already know the Walmart numbers. So you've got to just think from a fundamental basis is that, like yesterday, Lowe's was up big on the Home Depot report because we didn't have the Lowe's report yet. So everybody's expecting Lowe's to report really well then. But we already have looking at Lowe's Target or Lowe's Home Depot, or looking at Walmart Target, we already have the Walmart numbers. So Walmart's not going to move up 4 or 5% because they're going to blow it away. No, we already know their numbers. They already know they beat. We already know they had a nice move up. So you can't expect more than like the 1 point move or maybe a 2 point move in Walmart of this good Target report, because this is just Target's numbers. And we already knew the Walmart numbers. So you got to watch with the hedging when you're hedging these things. You can't just pair them up and say, okay, well, if Target's up 15% tomorrow, Walmart will be up 5 or 10. It's not going to be the case, because Walmart already reported the best you were going to get was maybe 1 or 2% move out of Walmart. And that's what you're getting this morning. So you got to watch with the pairs traders. You can't just take them and, at face value. You got to consider all those factors. But this is an incredible move for Target. I don't even know what to say. I'm blown away that the stock is up this much. I mean, it's a good report. But come on, up 16%? It seems silly.
It's
but
just
this
the market
gets sillier.
Yep. I mean, it's shorts too. I mean, anybody that's ever shorted this stock is underwater here. So I'll just go with my old, see what the pre-market high is, see what the open is, see if you bust through 100 and then come back down, throw it. Personally, I think I may take it off my screen today. I just don't want to short it. I know I'm not going to buy it. I wish maybe we should dial up Jeremy and see if this is a gap open that he'd be willing to buy here. But
he does chase those sometimes, and sometimes the stock that goes up 14 goes up 16. Sometimes it's actually the easier path as opposed to calling a top. Sometimes it's just the easier path to just go with it.
I can't do it.
It's unbelievable. I cannot even fathom how big this move is. Now let's go to Lowe's. The same thing. This has got to be the biggest move I've ever seen for Lowe's off an earnings report. I don't ever remember it moving 12% on an earnings report. Maybe it probably has, but I don't remember it.
I don't.
What's 12%? The
number, they move down that much. They never move up.
It was incredible. What's the number? Spencer, sleeping.
I'm sorry. I was keeping up with the chat. I'm sorry. Repeat. I was reading chat messages.
Holy cow! Not even listening.
I'm sorry.
I'm sorry. Not even listening.
You know what? We need to bring Seth back. I think
I
was reading chat messages.
Seth around?
This guy is sleeping on the job here. This is where you promote the Benzinga Pro.
I'm sorry.
Oh, gosh,
I'm sorry.
Man, what's
all right? What we were asking for in a very kind way, could we please have the Lowe's numbers?
Yes. Oh my goodness. I'm sorry. I'm very embarrassed for whatever that's worth.
Go into his trusty Benzinga Pro.
Q2 EPS for Lowe's $2.15 versus $2.01. Sales 21 billion versus 20.95. So a slight sales beat and a better EPS beat for Lowe's. Their full year EPS guidance is in line with estimates.
This market just picks on people, and it picked on straddle writers last night. That's what it decided. This is ridiculous that it's up this much on this report. It's good numbers, but there's no fundamental reason the stock's worth 12% more than it was yesterday. It's just this market is crazy, and this volatility is up. These moves are up, and you've got to take advantage of that. So we've been warning about writing straddles for this quarter that it has not been working. We had that guest on a week ago that was, I was looking, wondering if it was selective perception on my part, and he says it is not. That actually straddle buyers have been doing fairly well this quarter, and they usually lose. So you look at it from this perspective and you think, okay, I'm not going to be writing any straddles. And if you're not writing, you're happy you didn't on Lowe's and Target here overnight, because these are blowing them away. And if you don't know what we're talking about the straddle, we're just talking about the call and the put. So basically, if, just hypothetical example, you could like buy the 100 call, buy the 100 put for the weekly expiration, and then you're participating in the move no matter what, because you're going up or down. And so we just add up those two premiums and it gives you the expected move. Expected move on Lowe's, I didn't get it, but I'd imagine it's definitely, I can almost guarantee you it wasn't $11. I'd imagine it was $5 or $6. I can go grab it from the closing prices right now, but I would imagine $5 or $6 tops.
So what was it?
Let's go look.
And it closed at 98 here. Let me.
So you grab the closest option, 98, $3, $6. It was around $6,
Okay.
606. So it's twice the expected move here too.
For full disclosure, I've owned Lowe's for a while. I don't even know, sometime in the middle of 2018, and I'm not selling it today because you're not supposed to sell stocks ever. But if
that's what I've been telling you. Now, in my long-term portfolio, my best stocks are the stocks I never sold, except for GE. That was a really ugly one. But yeah. I mean, that's the way you make long-term money. That Warren Buffett approach works. I've been doing really bad the last few years since I've started the actual radio show because I'm trading my long-term portfolio because I'm talking about it so much because I have to. So I have to disclose when I own the things. So it's, it makes me think about them more and it's making me trade them more.
Yeah,
so
but then Dennis, on the other hand, you sold your KHC.
Yeah, that went into the long-term portfolio and then it quickly came out of the long-term portfolio because I was scared on that one.
You know what? You guys are going to make fun of me here.
What do you got?
I don't have KHC anymore.
You sold it?
I didn't sell it. I different accounts at different places and stuff. And I had that in different accounts. I sold some losers last year. And in one account that I have, I marked that.
You forgot that you sold KHC?
It was such a small position.
And you forgot that you even sold it?
Yes.
What
I sold it at 43. I bought it at
cow, Joel, you're a hero.
I'm not a hero. I'm stupid for not knowing that. But I was looking into I signed on I gotta find this stock. I gotta find my cost basis. And I looked and it was out, I don't know, December 31st.
That's a good feeling. You're not losing all that money.
I know. Now I got to get in there and buy it. It's like a win.
I do the same thing, though. At the end of the year, I look at what kind of crap I have in my portfolio because usually I'm making money. Every year I've made money. And I look for some write-offs. So that's when I clean up my portfolio in December. Okay, I got this crappy GE stock, sold it, last year. Got this crappy Ford stock, sold it last year. Just to, because obviously we take some winners as we go along here too, even in the long-term stuff. So you want to counter that off and it's a good time to clean it up. So you cleaned it up and you cleaned it up at the right price. Cause look, that loser became a bigger loser for you.
Oh yeah. Yeah.
It's nice that neither of us, we both like KHC at 60. I actually got out at 62 somehow or something like that. On that ridiculous day, it popped up 10% because I was like, this is a ridiculous move for it. And I said, I'll rebuy it. But then the story just kept getting uglier, and I was like, I'm gonna hold off on this because they started talking about the dividend cut. It's like I'm gonna hold off. And now, at 25, you say, well, why wouldn't you buy it now? Wow, the story has just completely been, decimated. I mean, I don't know if it's even safe. The dividend, it's already been cut once. Is the new dividend that he lowered from 6.3% safe? So you got to ask yourself all those questions, and that's why I'm not coming in here and buying KHC, even though, I obviously can buy it 35 points cheaper than I sold it.
I got it. There's one of the best questions we've had in I'll call it correctly, the YouTube chat.
Sure.
And this is from CSTAM44. I don't know if I'm pronouncing that right. When straddling, do you guys usually sell the position that's going red first or hold for a retracement? Dennis, my answer is, if you got in for a reason and you get out for a reason, just get out of both at the same time as close as possible, because I've tried to leg out of some stuff. And
I always do really bad when I lag.
I know.
Remember what's the movie? Spencer, you can help me out with
what do we have? We have news here at 8:15. We settled the China deal here. What's going on? Another pop.
I'm looking.
We're booking. We just popped 22.5. Went down to 17.
Handles right there. We're coming right back in though.
But what was it? It was something. Someone said something somewhere.
Possible.
Nothing from Trump's Twitter, in case that's what
there you go. Spencer's
nothing from there. Was there an 8:15 number? I didn't realize there was any important econ data today.
U.S. recession fears, tax cuts. I don't know. Well,
We popped up. We popped up a little bit. Somebody said something there. So
okay.
before we went on that 3-point tangent there with the pop up of the 3 points in the S&Ps, I was going to say Rogue Trader. Do you remember that movie?
You know what? That's been on my watch list for a while.
Rogue Trader, and he tried to lag that spread.
Oh, yeah.
And he missed the one side, and then it just kept going. That's based on true story, and just kept moving against him and moving against him and moving against him. He's like, well, it's going to come back in. It's going to come back in. It's going to come back in. And then he add to the loser. All your sins. It's a good movie to watch if you're newer to trading because he does all the wrong things that you're never supposed to do. Adding to losers, missed the one side of the lag is where it started from, and then just got too big. It kept going down, and basically almost brought the whole firm down, or if he, very close to bringing the whole firm down. So interesting movie. That's why when you're lagging, you try to do it as quickly as possible. If you miss one side, you try to do it at the next print as possible. Don't just hold on and say, okay, well, I missed it for a dime. It's going to come back up. I'll get that dime back. And now you're losing $1 on a lag. And I do pair trading all the time. So you got to do it very quickly. I missed
that was Jerome Crevel from
You miss it.
Yeah, 2006 to 2008, he lost $6.9 billion US dollars for SocGen and trading.
How much do you lose?
6.9 billion.
That's a true story. That's incredible.
Yeah.
Wow. Yep. 6.9 billion.
He got 5 years of prison, and this is from Wikipedia. Okay. So who knows if this, who wrote this, maybe a third grader. But 2 years are suspended pending appeal. $6.9 billion in European stock index futures.
Good movie. Watch the movie.
Okay. Yeah. Remember Nick Lesson? Oh, no, that you guys won't remember that. That was 1995.
Well, that was the movie. I thought it was based on him.
Oh, I'm talking about the SocGen one.
I think Rogue Trader was based on Nick. So what Nick Lesson do?
Rogue Trader is based on the '90s thing because that was a movie from the late.
Okay.
90s. That was Nick. That was Nick Leeson.
It was Nick Leeson. Rogue Trader is based on Nick Leeson.
Yes. Yeah.
Okay. What Nick Leeson do?
He only lost 1.3 billion.
What did he do though? Well, we talked about he missed the one side of the leg.
Nikkei index futures.
Holy cow. Yeah. Don't miss one side of the lag.
Yeah, I guess there's your answer to your question.
Yeah, watch that movie and you see the horror story that can happen when you miss one side.
Okay.
Right. Crazy tangent we went on. Continuing.
All right, back to the retail earnings. We had Children's Place this morning as well, PLCE. Their EPS beat by a penny, 19 cents versus 18 cents. Sales of $420 versus $423 million. Q3 EPS guidance, very light on that number. High $2 range to low $3 range versus a $3.51 estimate. Full year EPS guidance light as well. Estimate was in the $6 range. Guidance was in the $5 range.
For stock trading, I haven't brought up today. Well, they have to sell something, right? Why not sell the stock that's been in the gutter, continues to go down? We didn't like the stock all the way up, Joel, and we didn't like it all the way down. At least I didn't. This is one that I've been dogging for a while, and I dogged this in like 2017 when it was like $80 and went to 160. So I obviously was wrong. It's come all the way back down. So I was just too early. So don't be too early on the trade either. 2 lessons today. Don't miss the lag and don't be too early. I never took a trade in it, but I know I didn't like it all the way up, and so I was wrong for 2 years. And it looks like I'm being right here now, but I would have been blown out, obviously, if it wasn't a trade. So $73, down $6. Stocks in a clear downtrend now. Rallies to be sold. That's
but do you want to sell this rally off 65, Dennis? We've rallied 7 points off the pre-market low.
These algos are crazy. Crazy algos.
Man, oh man, I'll use that 65. I'm thinking that since we've popped $7 off that level, that gonna find some buyers on the way back there. Where I don't exactly know. I'm gonna look at the 72.11. That's what you hit on your last pop. So you trade where you want in between this thing. 65, even pre-market low 72.11. The high off the rebound here, and should we just look at the straddle in that one?
Go ahead.
Let me see if I can pull it up. They moved.
I'll try to beat you to it.
Let's see, place.
I don't know if they have weeklies on it, which makes it a little more tougher.
Right. It's traded.
You got to go out further. Oh no, they do. 79, 8,
80.
Looks like $9. 9.
It does.
Well, if I add up just the closes, yeah, around 8, close to 9. Let's round it to 9.
So you lost on that one.
Well, you're losing, but you wouldn't have if you had your bid out there. So
True.
I went down 13.
Good point. Good point.
I've always been a fan if I got to straddle. I never do because I don't like buying options. But if I did, I like to set my order out there and after hours and play the reversal off of it sometimes, because sometimes there's expected moves, especially if you only have one side. So let's say it calls and you see, the straddle move where it moves $10 and its expected move was $10. A lot of times you see reversals at those points.
We got our RSP sold target. Let us know. I hope you sold it as a long. Please tell us that you sold target.
$100.34. We just told you on the show that it was $100. We just gave you $1.35. That was 99.
If you had the guts to buy.
Who was that guy on the show? And he used to play that way. And I was like, it's a good strategy. When a stock goes to 95, it usually goes to 100.
Well, there's a couple different.
Somebody we had on the show that was telling us about that.
There's a couple different people. There was Kenny Glick.
Well, Kenny, yeah, but it wasn't Kenny.
You're thinking of Mojo Mike.
I am Mojo. And he got mad at us, but then he wanted to come back. So he got mad at us for a bit. I don't remember what it was over. We called him the wrong name or something.
That Mojo Mike interview predates me. That's how long ago that was.
I think we messed up his name or something, and he was mad about that. But you know what? He was good. And then he called back, and then we're going to have him back on the show. We should get Mojo back. He actually had a good strategy. Mojo, if you're listening, you have a good strategy there. I like that. His strategy was talking about stocks go to like 95, go to 100. So I buy them. Stocks go to 99. Stocks that go from like Target from 85 to 99 go to 100. They usually do. And it just did. So there you go.
I'm going to get
strategy.
I'm going to get a look.
Mojo.
I'm going to get a look at the 200 calls in Target now that it crossed 100. I'm going to look at the 150s or the 200s.
Okay, continue on our merry earnings parade here.
Sure.
Toll Brothers. Last night, I got a story.
You have a story about Toll Brothers?
Yeah, once you give the earnings.
All right. $1 was the EPS versus an 83-cent estimate. Sales of 1.77 versus $1.7 billion. So beats on both the EPS and sales for Toll Brothers in their third quarter.
Kick butt report. And you know what? All I could think was when it popped up into the 38 handle last night, I was like, these home builders always beat. They always rally on their earnings, and then they always sell off. It seems like they always do that. They always give it back for whatever reason. They blow it away. The algos pop them on the initial reports, but it seems like they always come back down. I shorted this last night at 38.40, and I took it off my screen, not looking at it. I looked at it 20 minutes later, and it's red, and I covered, I think, 36.70. So I literally took $1.70 out of that just because I've noticed it before, that it seems like when the home builders beat, they pop up on the initial report on really good numbers. So it's kind of scary. You kind of throw up in your mouth a little bit, fading that move. But I was like, I've seen this game again and again and again. I don't know why that's the case. I don't know why they don't hold gains, but they don't. The reports have been fantastic in a lot of cases with these home builders the last few quarters for obvious reasons. Interest rates are, low. So, I mean, they usually have pretty good quarters, but they don't hold the gains. So I played it that way. I was like, this time I'm going to play it. Didn't play with crazy size. Played it, a little smaller because these things can really blow against you. I'm not going to trade it with extreme size or anything like that, but traded where I was comfortable with it, enough to take it off my screen. And I hardly took any heat. I think it went up to 38.50 maybe, but within 10 minutes, it was already giving it back. So you got to that's just pattern recognition. And we're not talking about a chart. We're talking about the pattern of what did they do last earnings report. And it seems like I just, maybe it's selective perception on my part, but I remember Lennar doing it last quarter. I remember another one. And remember, you can't just do this all the time. If you do it 2-3 times, then people start to notice and the trades get crowded, and then it could continue on going against you. But it's the first real, home builder that at least, that we've had report in a while. So I tried to play it and it worked.
Where did you say you got it at?
38.40, I think I got short.
Nice. 38.72.
I did take a little heat. It did go a little bit through me because I was shorting it. You know what? I don't know if I did take that much heat because I think it went up to 38.72 and I was trying. It was like wide. And then I think it might have went 38.50 a couple times and it started to come in. But I took almost no heat on that.
Well, you picked a good area. I just think it's just
I was looking at that too.
Oh, okay. Because you got 3.
Yeah.
The guy that doesn't look at charts and the guy that
sometimes you do.
technicals.
Sometimes you do.
Yeah. Oh boy, I just shorted just like, oh, I better take a look at the chart. Oh yeah. That's good.
That's good. Oh yeah.
It's a good selective
Don't
chart
pick on me.
perception. When are you going to teach that course, Dennis?
That's been taught a lot of times through through your is that an economic? No, selective perception. That's a finance term, isn't it?
Yeah.
No, that's the psychology term. I learned that in psych.
Okay.
University, when you take a business degree, you gotta take your electives. I think that's a psychology thing, selective perception. And I use it. Look, that psychology class that I had to take in university works. I just use selective perception.
Do you want to the first test, the first class I ever took at Michigan was in psychology, and it was on four chapters in the book. I read 2 of the chapters. I read the summaries on the other 2, and I failed it. I failed that thing miserably. But I went to the TA. I still remember her name. You guys are going to think I'm crazy. And I said, I'm just new. I'm a freshman here. Is there anything I can do, to make this test up or anything? She goes, oh, well, if you do like a project or something, I can't remember, write a paper, I'll let you substitute it. So I did up this paper. I can't remember what it was on. And she ended up giving me a B+ on the paper. And she ended up substituting a B+ for a D.
You work it.
And I think I still got like a C in the course, man. I was floored.
Joel's a talker. He can work things. He's the only person that's got a free Shake Shack burger. Remember you worked that at the airport there? You worked it out.
In New York.
They were closed, I think, even. You're like, well, I did this radio show and we've never tried the burger. So I was just wondering, if I could try the burger. And they gave him a free Shake Shack burger. This guy knows how to work people. He's good, man. He's a talker.
It's fun. All right. So let's go more earnings here.
Sure.
All right. Urban Outfitters was kind of the only ones that caught my eye this morning. It is sticking to this retail theme here. They reported after the close yesterday, 61-cent EPS versus 58 cents, sales of $962 versus $980 million, comps down 3%. So EPS beat, sales missed, comps down, mixed quarter for Urban.
Can't buy every retailer. But again, Urban Outfitters is strip mall based, is it not? These things aren't in, this isn't big box. They like big box. They don't like any other ones.
Yeah.
They found a reason to sell. Even Kohl's yesterday was looking up. I thought, it was good enough. And I didn't play it, but obviously I tried to buy it in the pre-market 47, then went to 51. I never looked at it again until later after the open. And that thing just, gave it all back and then some and closed near the lows. I mean, they absolutely hate all these stocks unless they're big box like Target and Lowe's and Home Depot and Walmart. They hate all the other ones.
Did they break out the pizza sales?
Oh, they didn't break. I don't know. I didn't look at the pizza sales, Joel.
Maybe they should get into that though.
They did.
They did. Remember
they're selling pizza.
Yeah, well, they bought that restaurant. Remember
the Philadelphia pizzeria?
I got to do something. I mean, it's a smart move. They realize that the core businesses here are not doing.
That was a couple years ago, Dennis. They did it. They already.
Anyway, it's $50 down to 20. Chart is in a significant downtrend here. Pulling back, if you were trying to call a bottom, which I don't know why you'd want to do that, but I'd lean on that 1963 low. But these stories are all broken. They remain broken. I don't know. Like Kramer, did you hear Kramer yesterday on Macy's?
No.
He was trying to peel it back afterwards, but they were talking. This was maybe just when you were doing ticker time. That's why it was like 9:05, 9:10 in the morning. And Faber just asked about Macy's, and he says Macy's is done. And he's like, Faber's like, done? What do you mean done? And then he's trying to peel it back, but he's like, they're not coming back. And because some people are interpreting that they're going under. He's like, they're not coming back. I don't think the dividend, like he was basically just saying, his words were Macy's is done. And they started saying that, and Macy's started getting hit too. And I was like, I almost should just short this Macy's, because when Kramer says something like that, people hit the stock. I mean, it obviously got hit because of Kohl's, but that commentary did not help him either. He peeled it back afterwards and was trying to clarify it, just saying, it's not bouncing back. These business models are not bouncing back. Not saying it was going bankrupt, but it sure sounded like when you say Macy's is done means like, woo. Not good news. $15.36. You know what, Kramer? I agree with you. I think all rallies to be sold in Macy's. So, we can say, I'm not going to comment that it's done or that it's going bankrupt, but that chart sure shows that it could go the way of Sears and JCPenney.
We got a Macy's Bull coming on at 8:35. Ivan Feinseth of Tigress Financial Partners.
Pretty interesting conversation.
Yeah.
I disagree.
Okay, well, that doesn't surprise me. The day on earnings, I talked about that 15.5 level, and I thought eventually we would get there. We did get there. I just take a look at it. I mean, 1536 multi-year low. It just might be better like to put in like a 17.25 buy stop and say, okay, I'll buy in on some momentum. 1719 was the high on the gap down day, but we'll see what Ivan has to say in just about 4 minutes here. Dennis, real quick, we got talked about Marsh Murray, Sarepta, gonna move lower. Tell us, you made a long-term investment yesterday.
I did. I bought it yesterday. It's a stock I've wanted for a long time. I got this fly buzzing around. You ever get something? I got like a fruit fly buzzing around my face here, or it's some type of fly, and it's just annoying the hell out of me. So sorry about that. If I'm swinging at, I'm not swinging at you, Joel. I'm swinging at this fly. But I did take a long-term position, threw it in a half size. When I do the half sizes, I'm usually wrong, but I went a half size position, so kind of like a speculative position in Sarepta. Obviously, it's still somewhat of a spec play. I mean, it's probably more than a spec, but I mean, it was bad news they got there yesterday, but I think they'll figure that out maybe. Obviously, the drug got rejected, but I think, they might eventually be able to turn that around still. And, then obviously get the pop. But they got lots in the pipe. I mean, I think Sarepta is still a good story. I think eventually turns it around. I wanted the stock for a long time. I think it got cheap enough. I bought it $100 yesterday. I think it's cheap enough now that I feel comfortable owning at least a half size position just because I've wanted it for a long time. So I am buying into weakness. Yes, it's probably going to get weaker. I've stuck this in retirement account and tend not to look at it. I said to myself, if this goes to zero, I'm fine with it. But if it doesn't go to zero, this could be one of those that goes to 300 or 400 eventually in the long run. You're always looking for stocks like that. In the long run, I'm talking 10 years from now or more. So this is in the long-term account. Do not let me sell my Sarepta.
Okay. All right. I'll read at 80. I'll remind you to buy more. No. I like the formation here when you have like a news day or an earnings day and you make a low. 96.79 was that low. I'm not sure where that lined up with the monthlies. But if you're shorter term and you're just going for a swing or something, you got an area there, a low. You did close $6 or $5.50 off it. Pretty significant bump up in volume. You got people that want to buy the dip. Maybe I missed the dip yesterday. So I think you're going to find some buyers ahead of that 96.79. But that's good level from a swing trade, good level to lean on, see if you can recover. Real big move for Sarepta. Not moving a lot today. And let's see if it did. I mean, if it just was flat today or lost 50 cents or something, that would be a really good day for it. The closing price, 120.
These things don't just bounce right back.
Exactly.
Sometimes they'll bounce a bit, but usually they don't just bounce right back. So I think this is just, I'm hoping. I'm not even hoping anything about technicals on this. I'm just wanted the stock for a long time. I like the story. The market cap's like $8 billion. They got some drugs coming in the pipe. There's analyst estimates out there that think they can make like $10 a share by 2022. I mean, you start looking at it that way, and this thing, and obviously it's all speculation on where, if these drugs get actually FDA approval and start going. But there's a story here still.
And for whatever it's worth, and as the three analysts came out yesterday, they remained bullish on the stock. Nomura, Bank of America, and Credit Suisse, their analysts all maintained their buy ratings.
And the one person had a $270 target on it. So, yeah. I mean, that's the thing is, when you're buying something, you want to, if you're putting, a little bit of a spec play, you want significant upside potential. There is still significant upside potential in Sarepta. It could be a $300 stock in 5 years.
All right.
$300 stock in 3 years. It could be a $50 stock in 3 years. So it's a bit of a gamble, but I like the story, and you got to take some chances.
Let's take a quick break and grab our guest, Ivan Feinseth. He is the partner and CIO at Tigress Financial Partners. We'll be right back in a moment here with Ivan.
A lot of positions, so I'll let you guys run.
All right, welcome back, everyone. Pre-Market Prep, Spencer Israel, Joel Elconin, and Dennis Dick, joined now by Ivan Feinseth, as I mentioned, Tigress Financial Partners. Ivan, good morning. How's it going?
Very good. And yourself?
Doing well, doing well. Give us your thoughts here on the volatility we've seen the past couple weeks.
Well, there's really three main forces driving this market. There was earnings that did not come in as bad as feared. There is the Fed, which seems to be firmly on the side of the bulls. And then, of course, President Trump's going back and forth between, is he assessing more tariffs on Chinese goods or is he not? He originally started this sell-off when he proposed 10% tariffs on the final tranche of $300 billion worth of Chinese imports that are mostly consumer goods. The market sold off. And he also says he's not ready to make a deal with China, or he would make a deal only if it's a good deal for the U.S. And then he backed off, willing to delay a lot of these tariffs so that it won't negatively affect the upcoming holiday season. So those are kind of the underlying forces that have been driving the ups and downs in the market for the past few weeks.
But as a market participant, how are you approaching things here?
All these sell-offs to me are buying opportunities. The underlying fundamentals of the U.S. economy are phenomenally strong. As I said, the Fed is firmly on the side of the bulls. I really don't know why President Trump wants to pick on Powell. To me, he is the most stock market friendly and U.S. economy friendly Fed governor we've ever seen. From the time he said that he is willing to analyze data for the slightest signs of an economic slowdown, and then be more proactive on accommodating monetary policy. I mean, Greenspan wanted to wait until the data confirmed we were solidly in a recession, which usually is too late because a lot of the data is lagging, until he was willing to cut rates. I mean, he would cut rates after the horses have ran out of the barn, whereas Powell and the current Fed members, for the most part, want to be proactive to sustain what is so far one of the longest economic expansion in U.S. history.
We're on the line with Ivan Feinseth, partner and CIO at Tigress Financial Partners. Ivan, this morning we had some excellent retail earnings here coming off the heels of Home Depot yesterday. Lowe's with a nice beat. Target is a nice beat. But you're combing the ditches in the retail sector here for value. And just tell us the stock that you've been keeping an eye on.
Well, I do have a buy on Target. I was expecting a strong quarter. I have a neutral on Walmart, but the favorite retailers I like as far as big box are Target and Costco. Then niche retailers, I do like TJX, which is the parent company of TJ Maxx, Marshalls, and Home Goods. And I do like Macy's and Nordstrom's, even though that they have struggled. I think that Nordstrom's is doing so many things right and getting no benefit to the fact that they are just an incredible retailer. And Macy's has become a phenomenal omni-channel retailer. The My Macy's loyalty program is a tremendous asset. And even with the pullback in the stock right now, it has a dividend yield of almost 9%. So I think...
Aren't you worried about that getting slashed a little bit?
What, pardon me? I didn't hear what you said.
Aren't you worried about Macy's cutting that dividend?
No, they have the cash flow to more than pay it. Now dividends. I viewed that dividends don't support stock prices. And companies should only pay a dividend after they have exhausted the opportunity to reinvest net income in other positive return on capital yielding projects. However, Macy's has significant cash flow. It's not a cash flow issue at all. If you look at their payout ratio, they have expected earnings for the next 12 months of $2.83, and their dividend is a little over $1.60, a little under, $1.60. So they're a little over a 50% payout ratio, but they've kind of been in the 40 to 50 for a long time. So I think the dividend is secure. They have the cash flow to continue to invest in the digital initiatives that they are, the store upgrades that they're doing. So I definitely think it's secure.
Ivan, a Dennistic here. Just a question though with Macy's, and this is a stock that I've looked at because I'm kind of a value guy, and I look at this and think 9.71% dividend and kind of analyze it that way. But how do I know? This is what keeps me out of the stock. How do I know this is not J.C. Penney's? How do I know this is not Sears?
Very good points. To me, what creates value or opportunity in a retailer is that they have a differentiated shopping experience, and Macy's does. They do coupon and merchandise very well, opposite Nordstrom's. They have the asset of their loyalty program. JCPenney's has no loyalty program, and has no unique value proposition, has no unique merchandise, nothing great about the shopping experience. They're not really an omni-channel fulfillment retailer. For example, you go into Macy's, and if they don't have the specific shirt you want in the size or color, right there at the cashier, they will ship it to you for free in the color and size that you want. So they've built a tremendous fulfillment infrastructure. They connect well with the the consumer. They have great brand identity. They have differentiated merchandise. Unfortunately, JCPenney's has none of those, and it's sad. JCPenney's, and for the most part, Sears, dying a slow death. Sears, I believe, has been in same-store sales decline for almost 30 years. It's sad what happened to Sears. Even to me, the best thing about Sears was Craftsman Tools, and they sold that to Stanley Black & Decker, and you can now buy Craftsman Tools at Lowe's. You don't even have to go to Sears to get Craftsman tools, which are very good tools, by the way.
So, Ivan, when you say you like a stock like TJX or Macy's here, what does that really mean? Does that mean you would buy it right here, right now, today if you didn't?
Absolutely. Yes. I would be a buyer of Macy's right here at $15. I've been a buyer recommending it at higher prices, but I believe, well, first of all, one other point I want to make, that the two stores that they own in New York, the Macy's in Herald Square, and the Bloomingdale's building on 59th and 3rd are probably worth over $3 billion alone, and yet the company has a total equity market cap of right now just under $5 billion, $4.7 billion. So they own tremendous real estate.
Well, their most recent report wasn't so great, but I guess we'll see what happens going forward there.
That's what creates the opportunity.
That's what creates.
You got to buy when good companies are having a bad time.
You know what? That's value investing. That's how it goes. It's had a rough go of it the past decade or more, but that's it right there. That's the name of the game. Any other stocks in different sectors on your radar here, Ivan?
Yes, there's a number of stocks I like.
Aside from, we've talked about Garmin in the past. Aside from Garmin, let's say.
Another less known and less followed stock, Dolby Labs, had a recent pullback, but is benefiting from all of these blockbuster action adventure movies like the upcoming Star Wars movie, the Marvel movies, the Universal blockbuster action adventure movies, because all of these movies incorporate Dolby sound and Dolby video in audio and video enhancement. Unfortunately, there was concerns that the recent tariff issues would hurt their Chinese theater business or Chinese movie business, and I think that has created a buying opportunity. But Dolby Labs was the inventor of the original dynamic noise reduction. They specialize in audio and video enhancement technology. It's being incorporated in every possible consumer electronic that has sound or video, laptops, phones. It enhances sound. It gives that rich, immersive experience when you're in the theater. So in addition to Garmin, another lesser followed company, Dolby Labs. And then, of course, I do like Apple here. Apple is going to be launching their Apple TV Plus this November, along with Apple Arcade. And I think that they will exceed the expected subscriber level and exceed their goal of $50 billion in service revenue by 2020. And the services revenue is going to be their key driver of profitability. I also like Akamai, which is a leading cybersecurity company and also content management platform, which they have relationships with Disney, and AT&T, which are also launching direct-to-consumer streaming services. Disney's coming out with Disney Plus this fall, November 12th, which will also feature a new Star Wars series called The Mandalorian, which is about an intergalactic bounty hunter. And also AT&T will be launching their direct-to-consumer streaming service, HBO Max, sometime early next year. Also, AT&T is leveraging the value of the Warner Media assets they bought, and AT&T has a dividend of almost 6%. And in an environment of 1.5% or so 10-year Treasury yields, to me, anything with a dividend of over 2% is really good.
Let me ask you about a couple of the big boys here. You have buys on Amazon and Google here, and it just seems like every day we come in with talk about the antitrust probe of these big tech firms. Is this something that's just going to pass over? It's just in the news here. Obviously not affecting your long-term view on Amazon and Google. Comments, please.
Well, specific to Google, it's really interesting, and even Facebook. It's hard to have a monopoly if people don't actually pay you for your service. Facebook, as an example, provides a social media platform for you to use for free, not have for free, but use for free at your choice. Google is the dominant search engine. They have 98% market share, combined with desktop and mobile, and the bigger share on mobile, which is where most search is taking place. Again, they don't charge you to use this. People use it by choice. So it's hard to be in monopoly. You're not forcing people to pay for anything. So I think it's a lot of talk. I don't think that, voters are not sitting up at night thinking about the fact that their lives are bad because Google, Apple, Facebook, Amazon are huge companies. In fact, I think they like the fact that, the bigger the company, the more diverse services and products that they can offer. So I think it is all political rhetoric.
All right.
And I don't think anything will really come of it.
Ivan Feinseth, partner and CIO at Tigress Financial Partners. Ivan, as always, thanks for the time and have a good rest of your Wednesday.
Thank you.
All right. 8:49 here, Joel. What did we miss in the market?
Well, we're climbing. I mean, it's just a slow and steady climb. I don't know. We didn't find out the reason for that 8:15 bump here, but 21.50, that stands as your last price. 22.50 was the pre-market high as we speak. Intraday high right up here, 24.50, and you just got your daily highs up there. But yesterday it looked like we were peeling back from this 293 and a half level in the spider, and now it looks like we're going to perhaps challenge it once again. Target back under 100, up 14.25 at 99.78. Lowe still holding on to majority of its gains. And I did see Children's Place, a little bit of a creeper rally here, believe it or not, folks. Yeah, you keeping an eye on that, Triple D?
No, these are this stuff here is too hard to trade. This is out of the wheelhouse. I like, more boring plays. Like, obviously, I look for edges where like stocks are running up ahead of reports. I rarely trade reports. I traded the toll last night with a half size position because I had a feeling that it had done it before and I thought I was going to do it again. So I felt I had an edge because I've seen that happen before where they rally on good earnings and sell off. And it worked. But just coming in here and randomly placing, like, how do I control my risk in PLCE? The thing's had to spin down to 65, close at 78. I mean, go anywhere. Home Depot, Target, or Target and Lowe's, same thing. I mean, these things are $14. These aren't that easy to control the risk. So that's why, you have some liquidity. I guess you can day trade them, but there's easier money for me anyway. It's like I look at relationships. I'm always based on relationships. And it's difficult. So I would say, what's that going to drive up? And like we already talked about, it's not going to drive Home Depot that much because Home Depot's earnings were already reported. So you know that. So like what I'm looking at is I'm looking at this TLT trade down 84 cents. I'm looking at the financials trade up, but not up that much. And then I'm looking at the overall imbalance picture here, and I'm seeing some buys. I'm seeing a few buys in oil. Oil's having an okay morning here, a little bounce back for oil. But I'm also looking at perennial dogs like General Electric. 425,000 to sell here this morning in GE. So 838 it's trading flat. I mean, the stock can't, get off the mat. It's been a sell every time it's popped up. It's been a sell. It was a selling opportunity when it popped up on the exec buy and the CEO buy the other day. And stock remains in the complete doghouse. And just like we were saying a couple days ago, I'm like, even if you, dismiss everything that the allegations that were made, you're still buying a dog of a stock. And the stock's starting to leak those gains back again. So when crappy stocks rally, it's a good opportunity to get short.
All right, I want to talk about this Walmart Tesla story this morning. So it's one thing when we criticize Tesla's acquisition of SolarCity, or someone on TV or on CNBC or whatever criticizes the Tesla SolarCity thing. But when Walmart files suit against Tesla, criticizing their merger, that gets your attention. That's what's happened this morning, or I guess yesterday they filed it. Walmart is suing Tesla because apparently 7 of their solar installations have caught fire. And so they have sued Walmart. Walmart has sued Tesla, criticizing their shoddy production, criticizing this merger that was a bailout of a failing company. And I haven't seen Tesla shares react too much, but it is a very interesting headline. The details are worth reading here.
This is a scary headline. Again, there's so many bad headlines that come out of this stock. It's been resilient. I still have the puts written way down at the 120 long term. Those have not really, the premiums haven't even really moved. Part of me just wants to, for whatever reason, I still can't seem to hold Tesla. Part of me just wants to cover it as a scratch because there's been so many awful headlines. The earnings were awful. This is another awful headline, that the solar panels catching fire. I mean, this is a quality of the product now being, challenged here, obviously, and really bad if that's the case. I mean, something burns down. I mean, it's crazy bad. So you look at this and you see it down $4, and you think, why isn't it down 20? But then it's Tesla, and it just seems like every time it gets bad news, some reason they find a reason to buy it back anyways. So I don't know. This has been a really hard stock to trade.
So remember when the acquisition happened, they said they were going to build a factory, a solar factory in Buffalo. They've abandoned that. They've taken a $62 million impairment charge after just abandoning the research and development on their solar technology. And also, Musk was supposed to be deposed later this month in a shareholder lawsuit regarding this deal that I don't know how it got approved in the first place. So this could be this story could have legs here for a few weeks.
I'm not surprised the stock's trading down. I'm just surprised it's actually not trading down more.
Yeah. Joel, do you have thoughts?
Man, I looked at this thing since earnings, and it was holding, it was holding in there for a while, but now it's kind of broken through. It was holding 230, 228, 230 after earnings. And I don't know, it's still in a range. This is what it does. It just goes in a range for quite a while, and then it just has some violent news move one way or another. So on the downside here, we did go down to 211.55. I guess I haven't been watching it that closely, but I'll look at the closing price on earnings day. That was 228.82. So until we can get above that level, kind of hands off. And as far as taking a longer short-term position in it, really nothing. No feel, not a big catalyst for it on the upside.
It's a bad headline.
It's a super bad headline.
It's a super bad headline. Any other stock would be down 5% on this, but it's Tesla, so it holds up. I mean, I would be scared to buy this thing at 21.50 though right now. And like I said, I put written way low. The non-bankruptcy trade, which I talked about before, 100 points lower than here. But I look at this and think, man, they're doing a lot of things wrong.
So what I'll say about this, about the chart of Tesla specifically, is that it just goes to show how every stock has its own unique story. So when Beyond Meat stopped falling down, and I remember Dennis, and actually after it popped, the first time it popped above 220, that was in late July there. Beyond Meat had I guess I guess stopped going up as much for a little bit there in June, July. And I remember Dennis was saying that just shows me that the stock wants to go higher. When it stopped going down, it wanted to go higher. Tesla, again here, kind of stopped going down, but it's an entirely different beast. So you can't just apply the same logic across different charts.
You can, though, and you're making a very good point. I mean, this is a stock that has had really bad news in the last couple of months, or in the last month. The earnings report in the middle of July was terrible. This is terrible news here, too. We've had more execs leave as well. I mean, they have a lot of bad news, but let's really look here. I mean, really, over the last month, it's down from 260, but it's still holding up. I mean, the stock is very resilient. So it kind of is telling you in the face of bad news that it kind of wants to go higher. Now today, I think you're still in the digestion period for this. So I'd be very careful coming here and buying it this morning. But let's see what it does off this news. I think it could go lower off this news though.
Just want to quickly talk about Beyond Meat from yesterday. JP Morgan, I mean, they had a big effect on that on the downside. We remember the downgrade when it went down to 125 and change. And you did get a rally yesterday, and you are following through today. So I'd keep an eye on that 158.20. That was the high from yesterday because things opened up to 164. But it was an up day. Got a majority of the gains from the open. Hit 58.20. It actually closed lower than the open. But I don't know. Just not to move 20, 25 point move that maybe people were expecting. And the reason for that is there's just a lot of people stuck in this stock on, coming down from 225, actually 239.71. That's the all-time high in this. Almost got to 240.
All right, going crazy there.
Wow. Whoo.
Right before the report.
Holy crap. Oh, wow. But anyways,
some people. I don't think anybody's expecting a 25-point move this time around. It's different because the stock's been trading a lot longer. Like you said, all kinds of overheads apply now, so it's not an easy path for it to, on that day when they had the downgrade happen, the stock had been going straight up, so it was just room. This thing has been in consolidation station to a certain extent when you compare it to where it was. Where it was moving around 30, 40 points a day, it's moving around 3, 4, 5, 10 points a day now.
Yeah.
The ranges have come in more. And it's up 2 points here this morning. But again, I think it's going to stall out. I'm still going to say, I think Beyond Meat, I'm going to say right now, by the end of the year, I think it's under $100.
Yeah, especially the long.
That's not that far away. So I'm saying the next 4.5 months, I think it'll lose 55 points.
Steak dinner?
That's my target. No, because it's a lot of moves.
It's a big edge.
I'm giving up. I just, I'm making a bold call. I think it's going down. I think it's going to go down rather quickly when it starts to go down. But I could be wrong. I mean, that's why I'm not short it. So these things aren't that easy.
We got what time was this tweet? Doing great with China and other trade deals. The only problem we have is Jay Powell and the Fed. He's like a golfer that doesn't know how to putt. And then I missed it.
Why 8 minutes ago.
8 minutes ago?
Why do we keep getting these tweets? Why? I mean, I guess it's good for me as a trader, so I should be thanking him because I get more volatility and obviously can make more money with more volatility. But it's like I cannot, here we are doing a radio show and I'm not looking at my Trump Twitter feed and stuff is being affected by it. Talking up the market so much. I mean, it goes down, he talks up. And this is why it's such a hard market to short when you have a president that is so behind this. And I agree with Ivan. What he was just saying is that, let's be honest, the Fed's been the problem. The Fed has been defending this market too. Fed isn't the reason the market's lower. There's a lot of other reasons the market could be lower. The Fed is the reason the market's still staying up.
I don't know. Yeah. All right. Before we wrap, just a couple earnings that caught my eye. Not earnings, ratings. Not much in the way of downgrades, but as far as upgrades this morning, we have Craig Hallam upgrading Redfin and Remax to buy, and Stifel Nicholas upgrading ServiceNow to buy, raising their price target on that from 290 to 320 on ticker NOW. We have show today. What, Dennis?
Just saying big moves.
Yeah, that'll be it for us. Thanks to Ivan Feinseth. Thanks to all of you in our chats on YouTube and at premarket.benzinga.com. Catch our podcast or rewatch the show on our YouTube channel after we are done here. Questions, comments, concerns, email us, premarket@benzinga.com. Please remember all the information from our show meant to be used as informational purposes only, not for investing or trading advice. Everyone have a great rest of your day. We will see you on Thursday.